What's good to all my young investors, and welcome back to the channel. In today's video, I'm gonna hook you guys up with what I'm personally buying in this crazy stock market environment. The goal is to hook you guys up with gems and help you learn new information that you can hopefully use. And a quick little disclaimer before I start today's video. Just because I'm personally buying these companies doesn't mean you should do the same exact thing as well. Always make sure you guys do your own research as well. So without further ado, let's get into today's video. If you guys are new to the channel, I invest for passive income, or rather, money I don't have to work for. And as a result of that, all of the companies that I own in my portfolio pay me. So, the very first company that I'm buying more of is Realty Income Corporation, or ticker symbol O. And as you guys can see, I have about 11 shares of Realty Income Corporation. Realty Income Corporation is a monthly paying dividend company, and most of its top tenants are essential businesses. Businesses like Home Depot, Walmart, Walgreens, companies like that are currently still open even during this pandemic environment. Realty Income Corporation has also been consistently paying dividends since 1994. Realty Income Corporation actually also makes a lot of money from diversified rentals. The rental revenue extends from the drugstore sector, healthcare sector, and the fitness sector, and everything in between, so which is pretty cool. Knowing that Realty Income Corporation is well diversified in its income, and most of its top tenants are essential businesses, gives me the confidence knowing that Realty Income Corporation is going to survive this pandemic situation. And so the next company that I'm personally buying into right now is AT&T, or ticker symbol T. As you guys can see on the screen now, I currently have about 15 shares of AT&T. One of the reasons why I'm personally buying into AT&T right now is because of some of the assets that they own. AT&T owns huge assets like Warner Media, HBO, CNN, DC Entertainment, and so many more. AT&T has been paying and growing their dividends for over 35 years, which lets me know that they're reliable. And they currently have a nice dividend yield of about 6 to 7%. Now, AT&T have a high debt load at around $121 billion, which is not very good for a business. But they've been paying down their debt aggressively, which I really like. Just like the rest of the companies that I own in my portfolio, I'm in AT&T for the long run. And I'm confident that AT&T can fix their debt situation. And so next up, I have LTC Properties, ticker symbol LTC. LTC Properties buys and leases out healthcare facilities and senior housing. LTC Properties has been a monthly paying dividend company since 2005. And I know that COVID-19 tends to affect senior citizens more than it does anybody else. But like I mentioned earlier, I'm in this holding for the long run. LTC has guaranteed its dividends for the next 3 months. And, in my opinion, they're playing the situation wisely in terms of finances. Next up, a relatively new holding in my portfolio that I really like, SBUX, or ticker symbol SBUX. Starbucks' 3-year growth rate is about 20% give or take, and it's pretty aggressive growth, which I really like. They've also been super packed before the pandemic and during it as well. The drive-through line in every Starbucks in my area seems to always be packed. People need their coffee, and Starbucks' brand is just too strong. On top of that, Starbucks are in grocery stores like Safeway, which are always packed with foot traffic. They're a premium company that are going to be around for years to come, in my opinion. And so, my 5th stock that I'm buying more of is Aflac. It's a Fortune 500 company with a low payout ratio as well. Aflac's payout ratio is currently about 25%, which means a higher chance of big dividend raises in the future. They've been paying and growing their dividends for over 37 years. And on top of that, they've recently just increased their dividend by about 3.7%. Aflac is a solid company that I'm holding on to for years and years to come. And last but not least, I'm buying more of Johnson & Johnson. These guys are at the top of almost every investor's portfolio. These guys are a dream holding for every dividend investor. Johnson & Johnson have 57 years of dividend growth, and they're diversified in their income as well. They make money from consumer products, healthcare products, and so many more. They've also just increased their dividends by about 6% to about $1 a share. These guys, just like Aflac, are still raising their dividends even during this pandemic. Johnson & Johnson have been around for years and years, and they're a premium company in my opinion, which is why I'm buying more of them. And those are a few of the companies that I'm currently buying into during this pandemic situation. I hope you guys enjoyed the video. Subscribe to the channel, comment down below what you're personally buying, and like the video. And as always, I'll see you guys on the next one.